Hello, everybody in Leaving California world. I'm David Barry. I'm your host, and I got to be honest, I'm a little bit mad today. So we're going to have a really good show because I don't really get emotional, but I'm kind of pissed, to be quite frank. And I know that the markets are closed, so maybe we can share some stories. But the reason I'm mad, Monty, is my clients, they've been listening to the media,
Mm.
media. Everybody's so tuned into the media, and they couldn't wait for the interest rates to go down. So the Fed cut the interest rates by a half a point and the mortgage rates went up and they're mad. So I'm sorry to start off on an angry note, but Monty, how are you? What's going on? Why are the rates going up and they're not? Because these people have been waiting and they've been patient. Their patience is
Yeah,
wearing thin. So good morning, Monty. How are you?
yeah, I'm great. I'm happy to shed light on that and how it affects our listeners. Because the rates went up, people should be grateful that they have a little more time to jump in, get a better deal on a house, because when the rates do start going down, which they're about to start going down, we strongly believe that. And I'm going to share with you some data today so that you see that that's data driven. When that does happen, it's going to be harder to get as good of a deal on a house. It's going to be harder to get into a house. It's just going to be harder overall. So I like to say choose your hard. Getting a house in a low interest rate environment is really hard because there's so much competition and you have to pay over the asking price. Getting a house in a high interest rate environment is hard because you have to pay more on the monthly payments. You just choose your hard. And right now, we have a elongated window of time, thankfully, where you can get a better deal on a house. So let me break down. There's two main things that are going on here. One is inflation, and then one is the jobs report. So those two things are affecting interest rates quite a bit. Before that, though, let's go back to September 18th. That's the day that the Fed cut the Fed funds rate. And I always tell everybody that Fed funds rate is the rate at which banks can borrow from each other overnight. That is not mortgage interest rates. It is not the 10-year treasury. It is not mortgage-backed securities. That is the Fed funds rate. That's all they cut, and that was already priced into the market leading up to that. We did think we might get a little extra bump, but we did not because of the way it was perceived. And since then, what has happened is we've gotten other data, the jobs report and the inflation data, that has been hotter than what they expected. And so even last week, just to give a recap of last week, what we saw right at the end of the week on Friday was stocks were higher and mortgage bonds were slightly lower to start the day. We got the CPI, that consumer price index inflation report, and that producer price index wholesale inflation report. We got both of those. And so the fears are that that inflation boogeyman is back. So that's not a good thing when you think about mortgage interest rates. The other thing was that China was expected to announce another round of stimulus measures to continue to put a floor under their stock and housing market, which could put pressure on the bond market here. Last time they had an announcement, it helped the stock market and hurt the bonds, as it was thought that it could cause China to consume more and drive up commodity prices. So we have to keep an eye on that and know that the bonds could react. The market's closed today for Indigenous People Day, and it's going to open again tomorrow. So we'll see what the impact is there. We may start to see some diminishing effects there.
Money, if I
So
can,
yeah.
since we're talking about the media
Hmm.
and Terry Gilliam, our founder, I mean, my goodness, Terry, you stay up on so many things. And again, I don't want to have the crystal ball. And Monty, I do want to get your take on this, but Terry, maybe you could share. There's two sides of the story. One is Trump says that if he gets into office, he's going to just the rates are going to come down and people will be able to buy houses. If Harris gets in, she's going to give that $25,000 credit. I'm not sure where she's going to come up with the money, but those are two big media stories that have to do with housing. And that's what we want to help you with and talk about on our Money Matters show. Terry, what are your thoughts on that?
Well, I watch, as Monty was saying, I watch the markets. I do watch the 10-year treasury. I watch the gold market. I think all of those are indicating that inflation, while the reports come out and say it's more tame, although the one report at the end of last week was not great as far as inflation goes. I think that's what the Fed is watching, is that they don't want to reignite inflation with lower rates. If the market thinks inflation is starting to reignite, interest rates are going to go up on housing because people are going to react to that as not positive for inflation. They want inflation to come down. Personally, I believe that if Trump gets into office, he will reignite the economy inflation will come down. But, I think Harris coming in and raising the corporate tax rate, telling people they don't pay, that 50% of their income is not fair. They need to pay more than 50% of their income, especially if you're in California. The thing that I would advise people is get your house in order. And that's a pun, but get your house in order. Get with somebody like Monty Felts, who can create a plan when rates start to come down or rates do what you want them to do. Now, remember, houses continue to appreciate. So I don't care what interest rate you're doing. That house that you want to pay $350,000 for today in Tennessee could easily be 365 or 70, and you've got to drop in interest rates, but you're still paying a higher payment. Excuse me. If you're looking to get out of California, have your house in order, have your plan in place with somebody like Monty, who can advise you as things change. And there are 1,000 things that affect mortgage interest rates. There's 1,000 things that affect the stock market and the gold market. Just have a plan in place. Don't react. Be proactive and reach out and get a plan in place so that when the time comes, you've got a strategy and you know exactly what to do. If interest rates are 7%, we're going to do this. If interest rates are 5.5%, so that you know in advance what you're going to do based upon the market.
Terry, that's great advice. And you know what, Monty? I just had this revelation, Monty. My revelation is, I believe that maybe Americans, we are dreamers. We wish for things. And we have half the country is wishing for Kamala to win, and half the country is wishing for Trump to win. And we're wishing that interest rates come down, and we wish and we wish. I wish this, I wish that. But I don't think it's about wishing. And I think that's the one thing, Monty, every week that you explain to people is you don't need to hope for things. You don't have to wish for things. But just as Terry just said, if you have a plan and a strategy, that's more important than wishing that somebody wins the presidency. What are your thoughts on that, Monty?
Yeah, you need a plan, but you also need an advisor. You need somebody that's been down that road and has seen it and who knows how to guide you. I do want to give a little more information on the inflation, just because that is having such an effect. I don't want people to fear. I don't sell fear. I don't want to sell fear to any of our listeners. I want them to know and be knowledgeable about what's going on. And when they hear PPI and CPI, they know what that is. So the Producer Price Index report, that measures wholesale and producer inflation, that was unchanged in September. That was lower than what they expected. Looking at the decimals, it did come in a little bit, above zero. It just looked like it was zero, but it was barely rounded to zero and still beneath the estimates in a tame monthly reading. So year over year, that PPI was revised in August from 1.7 to 1.9 and then declined to 1.8 in the report from last week for September. So that upward revision did not help matters, and that 1.8 reading was hotter than the 1.6 that the market was anticipating. The core rate, though, this is the interesting one. This is the one that strips out the food and energy prices. Since the Fed doesn't have any influence over food and energy, that one rose 0.2 last month, and that was in line with the estimates. The actual monthly reading was a little bit below 0.2, it was 0.16, and it was also very tame, and that's a 2% annualized. So year over year, the core PPI rose from 2.4 to 2.8, which it was expected to come in at 2.7. So it's a little bit above that. Big reason why that year over year jumped so much was a slightly negative reading. At this time next year, we replace that as we do each month. So the bottom line is, while there are fears that inflation is reemerging, it has been making a ton of progress and will not move lower in a straight line. We know that. Rates don't go up in a straight line. They don't go down in a straight line. Neither does inflation. So the most significant development last week was the low shelter reading in CPI, the Consumer Price Index. That one, which is likely the first sign that it's finally catching up to the market rents. And because shelter makes up 46% of that core CPI, the lower shelter readings will make it much, much easier to make progress on inflation. The Fed did acknowledge this, and they said ahead of the CPI that they were anticipating shelter to finally start to catch up. And so that's the Fed's favorite measure of inflation, the personal consumption expenditures, PCE. That's going to be reported on Halloween Day, on October 31st. The market's expecting the headline PCE to fall to 2.1% and the core PCE to fall to 2.6%. Both of those are good readings. The PCE shares some of the same components as that PPI report. So the tame monthly figures could cause filter through into PCE and potentially cause a downside surprise. So as long as the revisions in PPI don't impact things. So overall, that should calm people and make them know it's good, even though there's talk of the inflation boogeyman coming back and stuff. That's not the direction we're going. You don't need to fear. You need to get in and get what Terry was just talking about, that appreciation on a home. Go ahead and get in there and catch that wave, because it's always going to outpace the interest rates.
Well, Monty, last week we talked a little bit about people. We were talking about the election. And by the way, when we're filming this, the election is only 3 weeks away. And I had shared that there's been many times when I've been in training seminars and I've heard different experts like Monty Felts talking about things. And then once they say it a different way, it finally resonates with me and I get it. So maybe, again, maybe you could give a little bit different take, because the election is only 3 weeks away. We have so many people that are waiting, and we're really speaking directly to our leaving California members. These people want to leave, and a lot of them are waiting right now. They're waiting for the election, or they're waiting to see what happens with the interest rates. And you've done such an amazing job about talking about how important this appreciation of housing is in this market right now. You have another way you could say it, and because maybe you could speak directly to these people that are waiting for the election to be over, or they're waiting to see what happens with the interest rates. Could you share your take on that?
Yeah, I would tell you, let's look at Warren Buffett. I don't know anybody that thinks that Warren Buffett is a bad person to listen to financially, or unwise, or impulsive. He's made really good investments over many, many decades, and is somebody that should be trusted. And so his advice, his direct quote was, when other people are fearful, which is where we are right now in these 3-week period, other people are fearful, the herd is holding back. So when other people are fearful, be greedy, jump in there, go grab something while everybody else is out of the room. And then when everybody else is greedy, he said, be fearful. So when everybody else says it's a great idea to go and buy a house, let's go, rates are dropping. That's actually the time that you should probably be saying, wait a minute, what should I really be doing here? And so I'm asking you, I want to challenge you as our listeners to sit and think, are you doing what everybody else is doing? Or are you going out and creating a legacy for yourself and your family by doing something that others aren't doing, but that the experts are saying would be a good idea? It just takes courage to do it.
Yeah. And Terry, maybe you could give your take on, the election is 3 weeks from tomorrow as of this filming. And to the people that are leaving California that really, really, truly want to. And by the way, I had an amazing conversation with a great family out of Bakersfield yesterday. And Terry and I do free consultations to people. Monty does free consultations. That's pretty much what he does 7 days a week. So we're here for you, and we will give free consultation. But maybe speak directly, Terry, to the people that are saying, I'm going to wait till the election's over before I make a decision, or I'm going to wait to see what happens with the interest rates. Terry, you want to share a quick thought on that to our members?
Sure. I would say that that's fine. If you want to wait 3 weeks to start deciding what to do, I can tell you, no matter who wins, things are not going to get better in California. Remember, California every year passes over 1,000 laws, 1,000 new laws every stinking year. And January 1st, typically a lot of those go into effect. If not, then it's July 1st. Do you want 1,000 more laws on the books this year than last year? Don't let interest rates, don't let the market, don't let any of that determine whether you move to a place where you have a lot more freedom. Your kids are educated in a school that teaches them traditional values, if you will, not what California is trying to do, indoctrinate our children. Life is just so different. And then let me also say this. So I went through a hurricane last week here in Central Florida. I'm telling you, Florida does a great job. DeSantis had 50,000 linemen set up in the state after the hurricane, and power's being restored very quickly. Now, granted, there were areas that were devastated, and we feel sorry for those people. We pray for them. We pray for recovery. However, here in Central Florida, I will tell you, this is 2024. My home that I'm in, and I know this because I have a history here, has not lost power in a hurricane in 20 years. We've been through probably 6 or 8 hurricanes, never lost power. That's what you want to know. You want to know. Now, does that mean the next hurricane we could lose power? It does. However, the infrastructure here, they've put almost all lines underground in the area where I live. In fact, they have put all lines underground, including internet, cable, power. If you have a phone, I don't know, we all use cell phones now, but I didn't lose any of that. So the point of that is don't let the unknown scare you when you're in a place that you're not happy. Feel free to again, to reach out to Monty, reach out to David or me. We can help you set a plan. Let me just throw one more thing in there. Remember, we have a network of realtors across the country. We have a great group of movers who are all certified, verified, have great safety records, have helped hundreds, if not thousands of our members move. We have Monty to help on the mortgage side. We've got the whole network set up for you. Reach out to us. We don't charge you anything for that. We're here to help.
Yeah, we are. And again, this is our Money Matters shows because it does. And if you like this content and you know of people that are thinking about leaving, this might be the information that they needed to make that big decision. And we understand it's a big decision. I get it. But if you're the more educated, the more knowledge you have, the better decision you're going to make and the less stress you're going to go through. Again, this is Money Matters. We hope you have a great week and we'll talk to you soon. Take care. Bye-bye.